You talk about resilient entrepreneurs. How about like resilient investors as well? What's your take on what you've seen from various investors that you've co-invested with or worked with on boards and all that?
Look, I think it's underappreciated that being a really great venture investor is also a multi-decade game and an apprenticeship business. And it's not just raising a little bit of money and showing up with a check. And I think Kauffman Fellows gave me a lot of good frameworks for how to pursue this, right? I did the program when I first started, but certainly for emerging managers and people who are building their own firms, right? It's like building a startup, right? You're really learning as you go in a lot of this. And I think reminding yourself that building a great venture fund is about a lot more than just being a good picker, right? Of, well, that's a good company. Let's invest in that one. And all the different parts of not only see the deal, pick the deal, win the deal, but then afterwards really partnering with founders. And I think the best investors really do view this as partnership and really do take it seriously and really do think about the human part of it. And that pays off, right? Because if you look at, you can pick Sequoia or Accel or Lightspeed or Andreessen, or you can go to the next stage and look at folks like General Atlantic. A lot of times these guys are backing the same founder 2 or 3 times in different companies over a 20 or 30-year period. And you only do that if you prioritize kind of people and relationships first and really try to be good to founders as you go. Even with Endeavor, as we get older and go into our third decade and kind of our second decade as an investor, close to 20% of the deals we did this year will be in Endeavor entrepreneurs starting new companies, right, on their second or third or fourth company, right? And I think that's a really important kind of thing to think about.
Yeah. Do you also have never entrepreneurs who invest in the Catalyst Fund?
Oh, for sure. Yeah, we got tons of them. One of our own things, we want Endeavor to be of, by, and for entrepreneurs, which means someday we'd like Endeavor founders, Endeavor entrepreneurs to take over the local chapters in every country and be the board members, to be the donors, to be the mentors, but yeah, also to be the LPs, right? Our most recent fund is $290 million. It's a very much a community-based approach to LPs. So we raise money from all the board members and mentors and people involved with Endeavor. It's by invite only and inviting people in. But more than 140 of those LPs in this last fund actually are Endeavor entrepreneurs. So we have tons and tons of our own founders.
Yeah, no, I think that's really like the flywheel. The ideal flywheel for VC is ultimately to have the portfolio company they invested in not just start second, third companies, but also even potentially invest in their future funds. I think that's pretty cool. And speaking of LPs, I think in Southeast Asia and like the view on exit is not as bright as it initially was, and you have a lot of funds that are becoming more creative about how they think about exits, whether it's looking to more non-traditional kind of like buyers or expanding the buyer set to more global pool and all these things. How, I guess in your conversations on the other side of this value chain to LPs and buyers and all of that, like how do they view emerging markets and like pathways to exit from there? You talked about Peak earlier, which I guess is a little bit of a older deal, right? And that was bought out by a much more global company. Yeah. What are your views on the exit environment?
Yeah, so look, still today, the biggest success stories with Endeavor Catalyst, we've had 26 exits, right? 11 IPOs and then a bunch of acquisitions. But the biggest success stories, the liquidity is actually still coming from largely the US market, meaning the biggest IPOs have been in New York, NASDAQ and New York Stock Exchange. And the most successful acquisitions, the buyers have been companies like Uber, Zing, Google, etc. Right now, that's starting to shift a little bit. Our single biggest exit last year was a business actually out of Tunisia in Africa, was acquired for $700 million by a firm called BioNTech, which is a German pharma company. Right? Okay, now you're getting a little more cross-border buying with a European buyer. But I think if we're serious about liquidity for venture over the next decade, we need to develop more liquidity from regional markets in Latin America, in Southeast Asia, in the Middle East. And that's both IPO, public market, and M&A. And so we have to work more with the biggest groups who could be acquirers and be buyers. We will continue to have the global firms buy things, right? Like I would not be surprised to see Microsoft, Amazon, some of these guys actually get more acquisitive in some emerging markets because they understand the value of it, right? But they see where the growth is coming from, right, in their businesses, and they know it's in these other geographies. We actually talk about this pretty openly in Endeavor Catalyst portfolio. So far, of the 300 or so companies, right, we've backed 60 businesses, 60, that have grown up to be billion-dollar businesses. But we've only exited 10 of those, right? So we have 50 private unicorns. And the idea is, where do these companies go for liquidity, right? Some of the biggest ones will be able to list in the US, but many of them won't, right? So should they list in London? Should they list in Abu Dhabi or Dubai or Saudi Arabia or Singapore or Hong Kong, right? It's interesting to try to see. We're investors in Bukalapak. We were very optimistic about listing Bukalapak in Indonesia. And candidly, the IPO went great, right? They raised $1 billion. It was a tremendous sort of event. It was great for the company, provided liquidity. But it has not been a great market to be listed in, right? Because there hasn't been a ton of liquidity over time. The stock doesn't trade the way it would if we were listed on a US exchange, for example. And it doesn't mean we've given up, right? It just means, okay, Indonesia Stock Exchange is not yet where we would want it to be, right? To be a true liquidity option for the best companies.
Yeah, and I guess this whole, you're talking about globalization of entrepreneurs, globalization of VC, and I think there also has to be, like you mentioned, globalization of exit options and exit pathways, which is probably a much longer game to play because you have a lot of different factors that come into it.
Well, I've been thinking about it like this recently, right? We study venture going global as like VC dollars invested. Okay, and that started about 15 years ago with venture starting to go to more places. You can use kind of a midpoint measurement of unicorns, right? Or private companies getting valued at $1 billion. That really started to go global maybe 5 to 7 years ago. But liquidity, like true liquidity, exits and IPOs and things, really only has just started recently outside the US. And in some ways it makes sense, right? Because the venture is a 10 or 15 year timeline. The dollars going into all these companies are going to come out later, right? And so it makes me cautiously optimistic that just systematically between now and 2030, we are going to see a lot more liquidity in a lot of these places.